They have indeed taken a short position on the company, and that is probably the most noteworthy aspect of the whole saga. I would refrain from painting a lot of national color to this issue. They seem to be somewhat mercenary in their approach. Yes, there are a lot of coincidences with the rise of India, etc. But the fact is that most of the Adani company stocks have indeed risen very sharply, meteorically, some would say, over the last just couple of years. Stock going from 60 rupees to 2000 is indeed meteoric. So there are a lot of players globally who scout for stocks which have gone up, look for issues and try to short them in a very mercenary way. So to that extent, they did have a vested interest, you would say, in putting out such a report. But for a report which is, let's say, 100 pages plus, I don't know why it took them a very long time to, quote unquote, investigate it. They could have done it faster. They could have, they could have waited for Adani to respond, etc. So they seemed a little bit hasty, or in terms of rolling it out suddenly. And maybe the FPO was playing on their mind. Now coming to the merits of the whole case, right? Again, I don't have all the details. I don't wish to comment on who is right, who is wrong in this case. But as an equity investment advisor, I always ensure that the stocks that I pick have as low debt as possible. Now, most of the Adani stocks are heavily leveraged. The point was made about the debt market cap ratio being relatively low, but I also look at the debt equity ratio, and that is quite high for most of the group companies. And that's one reason why, I would personally tend to stay away from companies where leverage is high, where there's a lot of infra play, etc. Because there are a lot of procedural issues, government coordination issues which are there, which for a retail shareholder, it is very difficult to understand. As long as the going is good, people enjoy the party. But when things go bad, that's when, things really. In fact, I was on this a few months back telling why one should stay away from the LIC IPO at that time. I was one of probably the dissenting voice in the panel. So the LIC angle also adds, to the fact that there is a lot of government interaction. So retail investor, please be careful. Don't try to catch a falling knife. Don't try to get into shorting mode. These are, the fact that Adani has been overvalued, has high debt, is known for many years. If somebody had tried to short this stock a year back, they would have lost their shirt. So markets are very intense at this stage. I would say, one has to, a retail investor should stay back and not panic. As far as the allegations in the report are concerned, that they are having a lot of convoluted structures, offshore vehicles, etc., there are.
Okay.
The law is very fine-grained here, and we should leave it to the regulator and professionals to probe it. And as opposed to debating, did they do the right thing by having shell company and all that. A lot of things are grey. There's also a point made about the auditors were very young. Now, there's no law by the CA Institute that auditor should have X number of years of experience to sign off a book. So pretty much there's a counterpoint to every point there. And one could argue, I think the lesson I would take from this whole episode is that one has to be careful in getting into stocks which are rising meteorically. One has to be extremely careful playing momentum. One has to be, staying away from shorting, etc. Otherwise, episodes like this could just, lead to ruin for.
Okay. Let me